Hello and welcome to the Now Educated podcast. We thought it would be a good idea for this December podcast to do it as a video podcast and take the time to thank you for joining us on this journey over the last couple of months, sharing our episodes with your friends, and hopefully in our small little way, we've helped you begin to improve your relationship with money. And if you'd allow us, we'd like to keep doing the same in 2023. I hope you do. I hope you do. So let's get into the episode. And today we're talking about money as per usual and a particular asset that we believe would be a great idea for you to have if you want to build wealth for yourself and for those you love. And that asset is a home or real estate investment properties. And we believe that for a couple of reasons. Firstly, there's the security aspect. We've spoken about this on other episodes. And there's also the aspect of the income that property tends to generate for people. And it's fairly stable, fairly predictable, and can be adjusted to take into account of inflation. Now, if you like me and a couple of other Zimbabweans, you'll also realize that you don't wake up every morning and say, oh, yeah, I feel like buying a property. Let me go and look for one. Because one of the reasons is buying a property is expensive or requires a relatively significant amount of money. And for some of us, we don't have that kind of money lying around idle. And whenever we want to buy a piece of property or buy a home, we find ourselves having to borrow either from the person who's selling the place in the form of extended payment terms, or we go to a financial institution that pays the seller the full consideration and allows us to pay it back over a time frame. Now, the mortgage, and they call those mortgages, so they're long-term loans usually used for the purchase of high-value items, largely property for residential or maybe business purposes. Now, if you like me, who's gone out and done that process of getting a mortgage, there's some things that I really want us to all know that can help us in our journey towards building wealth and having a better relationship with money. And that is, we must understand how to change a good deal for the bank into a great deal for us. Now, if you go to these financial institutions, very often for a mortgage in Zim, traditionally they'll offer you a 25-year mortgage. That's the longest that they could stretch it to. And that would mean that I would go in, buy a property, or wanting to buy a property and tell them it costs X much, they'll evaluate me, decide whether I qualify for the loan. If I qualify for the loan, they'll tell me how much I need to expect to pay on a monthly basis over a 25-year period. That's generally how mortgages work. And after the 25-year period, the property is mine and I will have fully paid back the loan. Now, if you are wanting to win this game and begin to be a property owner, but do it in a way that's not terrible for you, I want to share our experience in becoming homeowners. And hopefully, our experience can help you in your next purchase to also get the most out of the money that you've got or the money that you will have. Now, when we bought our property, we did the down payment, and then what the bank gave us to fulfill our obligation to the seller came up to about 59,500. I'm from Blair, so properties are not as ridiculously priced as in other cities we know. So let's go. So we had 59,500. Thank you very much. The bank, you know who you are. And the interest rate came up to about 12%, slightly less, but we're going to use 12% in this example. They gave us 25 years, and they expected us to pay back at the very least every single month. Now, what does that mean for us? So you've got this loan. Well, bravo, you're on track to becoming a property owner. But what do you need to know? What you need to know is what's about to come next. So they'll tell you this is how much you're going to pay. 25 by 12 gives you 300 payments. Pretty straightforward. So I'm going to make 300 payments to call myself a landlord. But what you may not have realized is how much you then pay in interest. And I remember us looking at this and we're like, what? 100 and what? In interest? That's a great deal for the bank, but a terrible deal for us. And most of the time, this is what you'll have to be clear on. You have to know how much extra you're paying. And the second thing we notice is that in the first 5 years of our mortgage, about 90% of our 626 payment was actually going towards the payment of interest. And only 10%, or at most 10%, was going towards reducing the amount we owed the bank. So it was the other 90% going interest, and where does the interest go? To the bank's pockets. So we said to ourselves, man, there must be a different way. What if we reduce the amount of years? What would that do for us? And we realized reducing the number of years meant you'd also reduce the amount of money you'd pay in interest. That for us was a better deal. So I'm going to share with you one option that I came across that I think is pretty cool, especially if you're in that space where you've just got a mortgage and its monthly installment that they've given you is just about how much you are able to pay realistically. You don't really have the bandwidth to be adding a lot more on your payments to reduce your time frame. And that's what's called the biweekly mortgage plan. Now, what does that mean? That means going to your bank and asking your bank, can you make my payments? Can you make my payments come due every 2 weeks as opposed to be on a monthly basis? And I want my payments to be exactly half the installment, the current installment. So that means if it's 626, that's about $313 that you're then saying, I want to pay this every 2 weeks, which means at the end of each month, technically speaking, you are paying 626. So you're not pushing yourself beyond your capacity. What could that potentially do? I want to show you. So I'm going to manipulate this particular calculator. If you want to get access to this calculator, you can go on to Excel, right click there and click on Insert, and then Spreadsheet Solutions, and you can get that loan amortization schedule. It's a pretty good tool to use for estimating how much you're likely to pay in terms of principal, when you pay back on a loan in terms of interest. And you find that most banks, especially in Zimbabwe, would tend to use this as a basis for especially long-term loans, reducing interest payment method. So you can get this, and I strongly encourage you before you get into any loan obligations, open up an Excel sheet if you have one, get this on there, and just begin to see what you're getting into and how much it will cost you. Okay, now back, I digress. So coming back here, we want to see if we change it into a bi-weekly mortgage plan, what does that do for you? Now, what it means is because you're doing bi-weekly, that means every 2 weeks. And if you've taken time to understand how many weeks are in a year, you've figured out that there are 52. So technically speaking, if you're going to pay the 313 every 2 weeks, and that means 626 a month, that translates to 26 payments, all right, over the course of a year, as opposed to 24. And you're paying 313. So I'm going to have to play around with this calculator here so that it reflects the 313 that we wanted to. So you're paying 313 every 2 weeks, right? And what that does for you, firstly, it reduces your payments to 450. Now, 455, when you convert that to years, it's about 18.9 years. So that means just by paying your monthly payments in 2-week periods, right? So doing your payments in bi-weekly, you're able to take back 6 years from your investment, from the loan period. So you cut your loan period to 19 years as opposed to 25. And what does that do in terms of interest? You end up paying a total interest of 82,774. Hold up. How much? 82,774. How much am I saving? You get to save 45,726 United States dollars. Woo! That's a lot of money. And all you're doing is taking your monthly installments, cutting it in half, and just paying it every 2 weeks. Remarkable. Magic, right? And you can do this. Simply write a letter to your bank Tell them, hey, I'd love to change my mortgage. I'd like to do 26 payments of 313 every 2 weeks, or whatever installment that they'll have shown you on them, and you say, can you cut it in half? And I want to pay it bi-weekly. And I want to do this, so that means I'm going to do 26 payments of this at the end of each year. So you're not stretching yourself too much. All you're doing is making sure that your account is funded every 2 weeks to be able for them to be able to take out that installment. What you've technically done is just added an additional payment every single year to your mortgage repayment just by going bi-weekly. And let's say the bank says, no, it ain't gonna work, fam. Our system doesn't allow us to do that. You can still get the same result, one, by adding 10% to your monthly installment. That's one way of doing it. The second way of doing it is you can, at the end of the year, if you're fortunate to get a bonus, or if you can act together and put aside a bit of money every single month, you can make an additional payment equivalent to your monthly installment at the end of the year. So that's just one of the ways. But bi-weekly mortgage payments, a great way to get years back and lots of money back into your wallet. The second way, which is how we worked it, is we had a time frame that we wanted to be done with this loan. And we said to ourselves, we want to be done in 10 years. 10. That's not a political sign. 10 years, we wanted to be out of this relationship, and hopefully on to the next property. So what did we do? We decided that we were going to save $7.50 a day and work with a 30-day month. And that meant we were going to be paying $225 as an extra payment every single month. So they'll deduct their $626, would add $225, and they would deduct that every single month. And just by doing this, what we were able to do, and I hope you can see this, is we were able to reduce the time of our loan to 121 payments, which translates to just over 10 years. All right, so it's 10 years. Let's not get too involved in the details. So we changed that to 10 years just by paying $225 extra, which is about 26% of our standard monthly payment. So 25% of our standard monthly payment is what we added to our installment. And that allowed us to get back about 15 years of what would have been a time we would be paying. So we got to save on interest that would have been charged over a 15-year period. And ended up, had we stuck to that 10-year plan, we would have ended up paying $43,161 as opposed to $128,551. That's US dollars, ladies and gentlemen. So what we saved just by making that additional payment every single month, 25% of our bank standard installment. So if you do this, whatever amount of money you're borrowing, if you push yourself and say, hey, I'm going to pay 25% more of what they expect me to pay as a monthly payment, you will cut down at least 15 years off your loan. And in our case, we got to save $85,339.40. The $85,000 that we could have paid out in interest stayed with us. And that allowed us to settle them. And we got that time frame of 10 years. We didn't qualify because the bank didn't think we had the income, but we looked for it. We made a plan for it, and every single day, our daily target was to find $7.50 from somewhere and make sure that we never miss that $225 additional payment on our mortgage. But the truth is this, we didn't even end up doing a 10-year mortgage. We actually ended up having a 2.5-year mortgage. And how did we do that? Well, firstly, after setting up the additional payment, we decided that this is fun, man. What about if we did a couple more things for other people? What if we served a couple more people and got a bit more money from some other stuff? And as opposed to spending it, took some of it and paid it. So we started doing some lump sum payments along the way. And being Zimbabwe, we were also quite fortunate that we went through a season where we moved from the United States dollar being our base currency to returning to the Zimbabwean dollar. And that created all sorts of instability and was bad news in a lot of spaces, except in the loan space, in the mortgage industry, where if you were a borrower, that would have been a great opportunity for you to extinguish any liabilities you had. So with just under 7 years left on our loan, the currency changed, and we were fortunate to be able to get our hands on a reasonable amount of money uh, just via the exchange rates and pay off our loan and end up owning a house free and clear in 2.5 years. And if we look back at that time frame, we look back and learn that it was important for us to make the decision that it was time to own a home. And if we were planning to build wealth, owning a home was part of that journey. That was the first decision. And we went out for it and we looked for a mortgage, even though our income didn't really seem like it was strong enough. And when we got it, we determined in ourselves to turn a good deal for the bank into a great deal for us. And when we got into the swing of things, when we started pushing ourselves to find an additional $7.50 every day, that meant we had to find different ways to serve different people. We began to realize that there is no limit to the amount of money we can make. And there's a lot more money. There's no limitation to the amount of money out there if you're willing to serve people. And the more we serve, the more money we're able to attract to ourselves. And that money we're able to allocate it and push it towards paying back these things and get into a space where now the home we own gives us the opportunity to raise money off the back of it. Right? We can borrow money and use a home as security. We now can get into these banking institutions or standard agreements because we've got collateral, which they usually ask for. And that allows us to get money to grow our businesses or to invest in things that we believe have the potential to multiply our income. And it also gives us the possibility to pass this on to our children so that they can have a primary home to stay in or use it as an income generating resource for themselves. And maybe in our later years, and after having done the same thing with other investment properties, this can become things we can sell in our later years just to enjoy life and then keep December every single month. My name is Terrence. I hope this has been helpful. It's been good. It's been a good season. It's been a good run. Thank you for being part of this journey and allowing us to educate you. And I hope for December, you are now educated. And remember, if you're part of this community, if you know better, we do better. And when we know better, we also want to make sure as many more people get to know better as well, so that collectively we all do better and things finally start to get better.